When is the pain train going to end? We need to talk about it. I am Dr. Stock, Doctor of Education, and if you don't want a train to choke on its food, tell it to chew. All right, there's a lot of talk going around about trying to predict when exactly during the fourth quarter or maybe even later than that, we're going to see the pain in the markets end. And I do want to say that while I don't have that date, I do think that I have something that's very worthwhile to share with you. And that's exactly why I'm making this video, because it will help tell you when we can expect to see the end of the pain. We can see the markets recover. I'll tell you about the free shares from Moomoo. I'll tell you about the Patreon where you can see my buys and sells. And then over here, my options course that I'm building out for you. In the meantime, I do want to get right into a technical analysis of what exactly we're seeing in the markets, and I think that this is enormous. So just to give you some background context, over in the Discord at this very morning, as I record this video, me and my Discord members were talking about, what exactly to expect from here on out. Are we at the bottom right now? Are we going to see the bottom sometime soon? What exactly does it look like? And I shared a chart with them that as I talked about it and as I looked into it more, I think that this is something that is very valuable for you to keep track of. And it's something that I keep track of and keep watching because it tells me a lot more about what to expect in painful times such as this one. And it even sheds some light on 2022 and all other historical events that we have. And we can use it informatively going forward from here. So it does translate very well to the future for what to look out for. So let me bring that down and put this up for you. What you're looking at right now, let me zoom way out on this. This is the 200 week for the SPY. And what I want you to pay attention to is this yellow smooth line that's going through here. That yellow smooth line is the 200 period moving average. It is a simple moving average that I have selected, not exponential. And what we can see back here in this dip where the candles actually go below it, that's .com bubble when we're looking at that. And so that was very significant and painful. As we came off of that, we dipped down below it. And then when we fast forward, we finally crossed above it going into the end of 2004. And we're fine for a while. And then Great Recession hits, 2008 housing market crisis. And again, you can see major sell-off down through that yellow smooth line when we look at this. So let's move forward. You can see we've come down and touched it several times since then. The pandemic, very, very briefly, even pushing down through it before we had that rampant rise that follows it. And then 2022, look at this. This is most recent. So when we bring that to memory, we came down, messed around with the 200-day, broke through it momentarily. But even when we closed that week, we almost closed right back at the 200-week as we look at it. So I think that that's going to be very important for us to look at. Let me take off some of these other indicators for right now, just to show you what we're currently looking at. So this 50-week is this smooth blue line that you see through here. And because it is a faster moving average than the 200-week, that's one that we can also pay attention to because that's going to serve as significant support for us in the near term. So where does that come out? Right now, that's at about 416. It's actually 415.61 as I record this video. So we're going to call it 416. And that's important to pay attention to. In this bottom that we have on the 200-day, possibly right now it's coming out at 391.53 is what we want to look at. And what I was showing you through history is that it took recession, and then pandemic to really break down through this 200-day. And you can see for pandemic, we didn't even stay there very long, thanks to economic stimulus really helping to prop things up. So then 2022, when we're thinking about rampant and runaway inflation and wage price spirals and Ukraine, Russia conflict, that brought us to our knees on this one and brought us back down to that 200-week. And then we recovered significantly as inflation pressures eased, as we didn't see wage price spiral, as we didn't have the markup on our foods and on our fuel prices, really something that completely and stifled us and choked us off financially. And so what do we get from that? Well, going back into October where we had that bottom and then coming back in again in January. So let me see where that is. January is right about here. Then we had those rises. We have a little bit of banking crisis come in here. And so that explains what we've seen recently on this one. So I want to bring your attention to several things. First of all, let me bring this up. And I'm going to use rays instead of segments just to make it a little bit easier as we look at this. So we have this top trend line right here. And then we can put another one right here off the bottom of this. And you can see what we're looking at right now in terms of trend lines and the fact that we're near the bottom of this trend line. We break through that. We still have the 50-day to catch, which is only about 1.5% down from where we're at right now, or maybe even 1.25% down to that 50, and it's possible that we bounce and catch some support there. So this is something that I'm watching because we are narrowing, and I wonder if we'll get that bounce and rattle in there a little bit. I think even better than that, though. Let me bring that down for you so it doesn't distract too much. I don't want this chart to be too busy. And I'm going to bring up the Fibonacci retracement. And so when I do that and I click on the most recent high that we've had and the most recent low that we've come to, at least in terms of overall high and overall low. So from the end of 2021, beginning of 2022, down all the way until October of 2022 until there, you can check this out and just look at the different values that we have. So you can see this line that we have here where we use that after we broke through it. We broke through it pretty darn quickly. We actually have the market resisting at that level and then support coming in at 0.5, which is good. But when we broke 0.5, we went right down through the 38.2, through the 23.6 as we're looking at this. And then you can see that we quickly recovered back through there. And then we bounced off of resistance again. And then just take a look at the different times. Of course, this is where the zero line is because that's our bottom. But then look how well that acted as support for us moving forward from there. And then we had resistance at 38.2. 0.5 was a big one. We hit 0.5, brought us back down. And notice that this data went from here down to here. So the farthest in time that this went is up to, looks like the week of Monday, October 10th of 2022. That means everything after this follows this Fibonacci retracement that I have here. So once that was established, you can see we broke up through 38.2, came back down to the 23.6, up to the 0.5, down to the 23.6, 0.5. And look where we are right now. We are almost back down to that 0.5 level as we look at this. So I think there's a lot of value looking at the weekly chart for the SPY, for the S&P 500. And as we look at this, we are getting really, really close to that 416 level that we have on here, which, by the way, coincides with what we have with the 50 week. So I think that's highly critical that we pay attention to that value, because when you have confluence like that, that's something that should absolutely be heeded, because that can be strong support for us in a near-term sense. And then should we break down through there, and as the weeks progress, maybe we even come out, and this orange line here is pretty darn close to the 400 level. And 400 is going to be critical support for us. Do we get down that low? I don't know, but we most definitely would be watching, because we can actually use this to sort of plan around what it is that we expect to see. So if I take that down for a moment, let's go back in time and see what Fibonacci tells us from pandemic up until this peak. So I'm going to delete that off, and I'm going to click this, and we're going to go from bottom on this thing all the way up to the top. There we go. And take a look at this. So this is pandemic all the way up until we peaked out here. So as soon as this peak forms, which, mind you, was formed by the week of January the 10th when we look at this one. So as soon as this peak was formed, or you can even argue that it was even the week before that. But then you can look at this to see where we caught support, and then we bounced for a little bit. We failed to make a new high. So not only did we come back down and retest support, but we broke through it, forming another low. And then we retest resistance at this line, broke down through a little bit, and then it recovered. And then you can see it's not perfect, but it's really, really good. And then look where that 50 is. Look where we turned around. Like, there's incredible information to be had from the Fibonacci retracements, at least for long-term time horizons. And you can use it intraday, you can use it across longer ones, and like I'm showing you here on the weekly one, you can use it up to here as well. And this might be a little bit better for planning out what we're going to do. In terms of that, look where that puts us. Talking about confluence that we have, this right here is at about 418. So it's not quite the 416 that we looked at before, but again, it's darn close. And if you look where this is, this comes in at 381. And this is all the way back from pandemic to peak. And look at that bottom shelf that we formed right here, going back through 2022 and into March of 2023, and where the market really started to turn things around. So as I look at this, as it currently stands, there's a lot of value. And if I change this to be more current, to looking at what we're going through from October up until now, well, I should say going back to the week of July 17th. So let me bring that down and put this on here. And we're going to go from this bottom here, and we're going to take that up to what we have for our most recent peak here. Look again, we are pretty darn close to that 418. If we go down from there, we have about 404 coming in on this, and it's near those. It's not perfect, but it's near them. It actually catches the bottoms that we have right here. for these candles. But now, mind you, they would be something that would be in between. You wouldn't know these as they formed from this chart. This one only tells you forward from this peak. So as we look at this, look where we turn things around. We turn things around at about the 434 level that I've been talking about. And then we did retrace for a little bit from there. And now went back, retested support, fell through it. And now it looks like we could possibly catch that next bounce, 416 to 418. That looks like about the area of support that we can be looking at. And we'll see if we actually don't come down there first, we can come back and retest this, maybe even break through it. We're going to have to watch and see as the different economic reports come out. As I record this, it is not 8:15, and at 8:15 we get ADP employment, and that's important that you pay attention to that. So free stocks from Moomoo using my link down in the description. In this time where it's difficult to find that alpha or to even lock in some gains, free stocks can help you do that. Down here, the deposit levels, each stock is valued up to $2,000 a piece. Here's the amount of free stocks that you get. Notice at the $5,000 deposit level is your free share of Tesla or Google. If you want to see how I'm navigating this market and adding to my cash piles, you can see my buys and sells by accessing my Patreon and then going over to my Discord that's available through that Patreon, as well as my research notes that I put out there, my different analyses, and I put up some technical charting over there to talk about when to enter and exit trades with the help of StockMo. So absolutely check that out. And if you want to know about options, you can go ahead and get this course that I'm building right now. And it does have from the very beginner level. So knowing absolutely nothing about options, you can pick up right, very fresh, get my perspective, talk to me over in the Discord. It's all available to you over there. So guys, I can't tell you how excited I am to share with you the 200 week on the SPY, and that to be really helping to determine, when to signal a turnaround for this, or are we going to drop further? Answering those questions, and the 200 week can really help us do it. And looking at what we have historically for just how bad things can get, and what it takes to actually break to the 200 week first of all, and the break through the 200 week on the S&P 500. So check it out. Let me know what you think down in the comments. Come and join me over at the Patreon if you want to see what I'm buying and selling and my different stock analyses that I have over there, my market research that I also put up. Talk with me over in the Discord. I got a wonderful community. They are just incredible, and I'm incredibly and wonderfully blessed to have them. Thank you guys for watching. Get your free stocks from Moomoo. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.